Welcome to the Accounting Success Podcast. Ian Wellham is a chartered accountant helping other CPA firms maximize their profit potential and become the most relevant advisor to clients. To learn how you can add value, introduce new revenue streams, and move into high-value advisory services, simply go to www.haydenrock.com. On the podcast, Ian brings together successful accountants and industry thought leaders to share with you how they serve business owners and how you can too. And now, here's your host, Ian Wellham.
Hello and welcome to the Accounting Success Podcast. I'm excited to have Steve Bankler on the call today. Steve's the founder of a 5 CPA firm bearing his name in San Antonio, Texas, and he has almost 40 years of experience in the accounting industry. Most impressively, Steve is employed by the United States Senate as sole investigative accountant to provide tax and accounting services to the Special Whitewater Committee. He was also a pro bono consultant to the United States Senate Banking Committee's inquiry into Swiss banks' involvement in holding Holocaust victims' assets. He has been accounting expert for the Wall Street Journal, Time Magazine, the Washington Post, NBC Nightly News, and Tax Notes Today. The firm works mainly with closely held businesses, but also provides forensic investigative accounting and accounting expert witness services to assist lawyers, judges, and juries with complicated accounting and tax matters. Steve, first of all, let me thank you for joining us today. Now, I know you're busy, so I appreciate you sharing your insights with our audience today.
My pleasure.
I'm really looking forward to talking with you. Now, I want to talk about your practice and some of the interesting things that you're doing, but first, perhaps you could give the listeners some little background and insight about yourself and also your firm.
Well, I actually got a degree in finance and grew up in a family-owned retail department store, clothing store, and knew that that was where I was going to spend my life and career. And after I graduated college, I was the first of the third generation to try to work there. And they weren't ready for me to assume a significant role, and I wasn't ready to not assume a significant role. So we parted ways, although we're very close family. And I worked around in industry using my finance degree, doing mergers and acquisitions and a few other things. Found my way back to the retail industry as in the accounting department, because that's a very specialized niche. And after working for 3 companies in a row that went bankrupt one after another, I said, I can do this without any help. I don't need to be working for people. So I went back to college and picked up my accounting hours, sat for the CPA exam, and opened up my own practice. And now, 40 years later, I've managed to stay out of the bankruptcy court, so I've done a little better.
Excellent. Well, I'm very pleased to hear that. Thanks for that kind of background intro, Steve. And now, one of the things I love on your website is your very first frequently asked question. If I may, I'm going to say the question reads, are you a, quote, full-service CPA firm? And you have the courage to answer in the following way. No, our firm serves a particular market. Most of our services are geared towards closely held and or family-owned businesses. I really love this, Steve. It's fantastic. I mean, most chartered accountants in the UK and CPAs in the US fall over themselves to be all things to all people, but you're taking the opposite approach. Perhaps you could give us a little bit of an explanation on your thinking behind why you're purposely turning people away.
Well, as I said earlier in my intro, I grew up in a family-owned business, and so I saw from the entrepreneur side how they worked with their CPA firm, and I don't think they were different than anybody else, and they viewed the accounting firm as a necessary evil. Someone to help them at tax time and do some planning. And I go, we can turn that negative into a positive by doing several things different. One is we work closely with our clients, and not only do we provide tax services, but we also provide management services and information. And every business that we do the work for, when we finish up a tax return, we give them what's called a profit sense report. Now, it's called profit sense because that's the name of the software. But basically, it compares their operations, their financial results, with other closely held, privately held businesses in the same, it's called the SIC code, Standard Industry Code. And we can make it by locale. We're in Texas. We try to use a Texas database if it's large enough, and by size. So if they're doing $3 million, we restrict the size on that to, say, $2 to $5 million, so that they actually get some additional information as to what their peers are doing on profitability, on sales, on payroll, on various financial indicators and various financial ratios. That's one thing that we do differently. The second thing we do differently is we have got some registered trademarks. One is our job is to put money in your pocket, and that is our job. We take that seriously. And we tell clients that if we're not doing our job, you should fire us. But our job is to find savings that puts money in your pocket, savings in operations, savings in taxes, and other savings that puts money in your pocket, pays our fee, and has money left over for you. So instead of it being a net drag on your earnings, we are contributing to your earnings. So there's just a couple things we do different.
Wow, that's fantastic. And I noticed that you're really picking out the closely held, family-owned businesses as your target audience. And in fact, one of your testimonials says, and I really like this as well, Stephen helped us to restructure and find smarter ways to do business. Other accountants will tell you, I don't see anything in the tax code that says we can do it. Stephen will tell you, I don't see anything in the tax code that says we can't do it. That's fantastic. Perhaps you'd give us a little bit more insight behind that, Stephen.
Yeah, well, when we meet with a new client, to show you the differences that we talk about, when we meet with a potential new client, we not only tell them how we compare them with other people, but we talk about three things. We talk about, can we save you some taxes? Are there things out there that you're doing that can be done differently and save you some taxes? The second thing we talk about is asset protection. In the U.S., we are a suing happy society, and we sue for everything. And we've also developed this philosophy that it's never your fault. Well, if it's never your fault, then it's got to be someone else's fault. So we look at your business structure to see if there's a way to set up obstacles and entities that would not make you an easy target for some lawyer who's suit happy, who's working on a contingency fee basis as well. And third thing we discuss with our clients is exit strategies. We tell all our clients that your business will be sold. Now, you may not be alive to see it, but at some point your business will be sold, and the best way to plan for that is to have the proper strategies in place that when you sell your business or transfer your business, that you've retained enough control to make sure that you get paid. Because the vast majority of small businesses that are sold, the seller has to take back a note and carry some of the proceeds. Well, if you're done a sale in the traditional manner and they stop paying you, by the time you go to court and get your business back, it's 9 months or a year later, and it may not be worth anything. So we have set up systems and procedures and entities that when you sell, if the buyer stops paying you, you can come in and get your business quickly back. Save the golden goose, and then you can litigate over who owes who how much money. But if the goose is dead, it doesn't really matter. So we're trying to save what's going on. And so that's where we talk about business entities, is coming up with multiple structures to, one, protect your assets, two, give you an opportunity to sell and protect your sale, and three, there are some tax-saving benefits of doing that.
Yes. Yeah. Well, I mean, I know for many business owners, corporate or entity structure is a little bit off the radar, subject that probably doesn't grab their attention. Most business owners choose their corporate structure either out of convenience or simplicity, or maybe because, for instance, an LLC is inexpensive and kind of flexible, but they don't understand the ramifications. Perhaps you could talk for a moment about the importance of the corporate structure and maybe even illustrate it with a client or two that you've helped.
Sure. Well, what we've done for the corporate structure is we've set up multiple entities, and if you go to my website, we have several client spotlights, and one of them is a company called McDuff Enterprises. And by having split corporate entities, is we end up going to a management company that has all the employees, including the owners, inside the management company. And it's like, for lack of a better word, it's an in-house leasing company that has the employees, what we call a PEO. and we have all our benefits there. And then we have the operations in another company. That's the operating. That's the company the business world sees or the public world sees. And going even further with some entities is sometimes we'll put trucks in the third entity because trucks going down the highway have big liabilities attached to them. And if we own our real estate, we'll put that in a separate entity, keeping it away from operations. So it's a gradual development. So we can be as simple as 2 or 3 entities. I've got one client in a city in North on Crate, and their business is now segregated into 14 or 15 different entities. It makes our job a little harder, but they find value in that. And that is why we stay in a niche market of closely held businesses, because these are the entrepreneurs that have figured out a way to make money. And that's their business, and they understand their business. They don't understand accounting. They don't understand tax. They don't understand some of the other things. Matter of fact, the vast majority of them, one spouse knew how to make money, and that forced the second spouse, who had no business knowledge, to become the bookkeeper, controller, watch over the money. And so those are our clients we work with. As a matter of fact, if somebody walks in off the street and says, hey, I want you to prepare my tax return, and they're not affiliated with any business and they don't know any of our clients, we don't even talk to them. We say, there are other accountants in town. We don't do that. And we do less than 20 tax returns of individuals that are unaffiliated with any business. So come April 15th, where all these other CPA firms are working 70 and 80 hours a week and trying to get all these tax returns out, April 15th is, while it's busy because we're doing our clients, is it's not that mad dash that does everything else. So we have found that limiting our expertise and limiting our clientele provides a better match for our expertise. It provides a better working environment for our people and a better environment for our clients.
I think actually I'd like to explore that a little further with you, Steve. It seems that you're very much a forward-looking accounting firm rather than a rearward one. Perhaps you would like to, let me put it this way. Typical CPA is what we call rear-view mirror approach to accounting. They ask the business owner, how much did you earn last year? And then say, okay, here's what you owe Uncle Sam. You believe that this is a tremendous disservice to your business owner. You've just explained multiple reasons why. Your philosophy is that your CPA firm should put your money in your pocket. Exactly what we believe in as well. In fact, you have a service called Another Profit Center dedicated to this goal. Perhaps you could expand on how your service works and how you help your business owners look to the future and how you as a firm interact with them.
Sure. As a matter of fact, we use that same example that you've just looked at. The rear window, the rear view mirror in your car is very small. The windshield is very big. The accountants tend to look at the rear view window, a mirror, instead of looking at the windshield. We try to remind ourselves that we're here looking at the windshield to help the client help them decide on where to go and how to get there. Another profit center is a term I came up with, that we want to be a profit center to our clients. We don't want to be just a drag on their earnings. And so that forces us to come up with, I think, creative ways to talk to clients, to get involved with our clients, to do tax planning. We use these profit center reports that we talked about with our clients to say, hey, everybody else has got a margin of 35%. You're only at 30%. What are they doing better than you're doing? These are your competitors. These aren't comparing you to the big public guys in your space, but to the small mom and pop entrepreneur in your space. What are they doing better? Why is their margins better than yours? And start asking questions that help the business owner run their business. When we prepare a tax return, we sit down and give them not only their tax return and their profit center report, but we keep track of our recommendations they've implemented. And we put a dollar sign next to those recommendations. And as I tell my staff and I tell my clients, those dollar signs had better be a lot bigger than our fees, so that we show and it's mutually beneficial for both parties, because live on our practice, our people don't work 60 and 70 hours during tax season. They work a 40-hour week, which does several things. One is that, as I tell potential new clients, is how would you like to be the client that at the end of a 50 or 60-hour week, they're working on your material? How fresh, how thoughtful are they going to be on that stuff? That's number one. Number two is you can't treat people like a paid slave. And by having good working conditions as opposed to the industry, I tend to keep people a lot longer. Clients' biggest complaints when they come to us is, this year Fred worked on my books. Last year was Susie. The year before that was Mary. I'm constantly training my CPA's people to work on our stuff. If we don't have turnover, then that means we don't have to spend time learning your business but once. That's number one. And number two is without turnover, we become more efficient. So you don't write a check made out to my firm at X dollars per hour. You write a check made out to our firm for so many dollars. So if we can do the work more efficiently, how do you care how we calculate our fees as long as they're reasonable and we're saving you money? So when potential clients come in, the fee discussion goes away right away because what they thought their objection to the other firm was with the fees, what they're really objecting to was the service and the lack of service and the lack of help for the fee. And when we describe what we do and how we do it, they really don't care about the fee.
So you've mentioned fees, and I'm glad because I would have brought it up anyway. But it seems to me that maybe, are you using a value-based billing system instead of hourly? Is that what you're telling us?
Yeah, we use probably value. It is a value-based system, and it's probably more of a flat rate system. And we said, if you bring us your books neat and clean, here's your annual fee. Here's what we expect your fee to be. Obviously, if we have to do more to clean it up, then it goes over and above that. But yes, it is a value-based system, and we quote in our engagement letter, we anticipate, we will spend 1 to 2 hours of quote cleanup, and then the rest of the time on delivering this stuff and discussing with you. And your annual fee is X.
Yeah. So I think it's interesting that you talk about the flat fee and you talk about your involvement with the clients. How do you stay involved with the clients? What is your meeting schedules? How often do you speak to your clients? Do you have various levels of service which they pay different amounts for?
Well, the answer to your last question is no. We only know how to treat clients one way, and that's give everybody the best service we can. But they call us when we emphasize the fact that, especially in tax planning, there are multiple ways to go from point A to point B. And just because the straight line way and the simplest way doesn't always get you the best result tax-wise. So to save you money, we have to be involved in the decision-making process before the decision is made. You can say, I'm going to do X, but don't have it already laid out and tell me after you've done it. Let me get involved before you've done it. You've done the transaction and you've done the deal. The second thing is we're very proactive. We spend a lot of time staying on top of tax trends, staying on top of cases of people who've won tax decisions. And then we think about it and say, okay, who does this benefit? And we start calling our clients and go, wait a minute, there's been a new tax case or a new situation that applies to you, and we think we can move this to you, and here's what we think it will save you. So for us to do our job, we have to be very proactive. We can't wait and talk to our clients once a year.
I understand. In fact, what are some of the common mistakes you actually see business owners making with regard to tax or business planning?
The biggest mistake is there was a qualified domestic production activity that was enacted by H.W. Bush in the early 2000s, and it took 9 years to become effective. And that is commonly known as a manufacturing deduction.
Yes.
For domestic manufacturers. But people tend to think in boxes, and they go, yeah, if you make a widget, you're a manufacturer. But the law is written so broadly that there are a lot of things that people are manufacturers that don't think about it. And so if you qualify as a manufacturer without going into great detail, the tax result is based on a mathematical formula, but if you satisfy the formula, 9% of your profits come to you tax-free, which is a pretty nice bonus.
Absolutely.
And so
9%.
9%. And so we actively look at making our clients manufacture. We picked up a company, a small company that they kept telling me they're a cosmetics distributor. They distribute cosmetics. It took me 45 minutes of discussion to find out. Finally, I said, what do? You just buy the cosmetics and you put your label on them, but they belong to somebody else? No. That's our formula. I said, so all you've done is you've taken the manufacturing and you're hiring someone to manufacture these cosmetics for you, but it's your formula, your registered trademark, your patent, your responsibility. You have all the risk of loss and all the risk of profit. You're the manufacturer. You just hired out the machinery and the equipment to somebody else. When they said yes, I go, now 9% of your profits flow to you. But she was convinced that she was a distributor, and her prior CPA treated her as a distributor. The trouble is, with a lot of our brethren, CPAs, is you ask a client what they do, and they accept it. They don't dig deeper to find out, wait a minute, I just picked up another gentleman who refurbishes aircraft. So his accountant was treating him as a paint contractor. And I go, man, that's tough because he requires a 50% deposit before he starts a job and 50% when he's over. I said, so if someone gives you a deposit in December, you've got all this income with no expenses because he's on a cash basis. He went, yeah, I guess so. And so I said, okay, tell me exactly what you do. Well, he strips down the paint, he puts on the paint, he he pulls out the interior, he refurbishes the interior. I said, that's considering manufacturing. You're redoing the job, and it's not just cosmetic. Having a new coat of paint also makes the aircraft more efficient. You pull out and you reupholster and redo so you're now manufacturing one item at a time.
Right.
And so now he can change his accounting method so that he doesn't recognize the income until the job is finished, not when he gets paid. And he's also gets 9% of his income to him tax-free. So in my years of looking at manufacturing, Major League Baseball qualifies as a manufacturing because part of manufacturing is making broadcast film and videotape for broadcast. And Major League Baseball treats, if you notice, they play the game live, and then sometime during the night they rerun it. And the reason they rerun it is the contract with the teams they have to rerun it, so they have to use the videotape. So as I talked to a representative of one of the baseball teams, because I didn't understand what they were doing, and I have a client that had a little 1% investment, and I was trying to understand what was going on. And he goes, well, that's why we have our contract that they have to rerun the game, they have to use the videotape. I said, so you don't have ball players anymore, you have actors. He goes, you're darn right. Yeah. And they get 9% of their profits tax-free. I'll do one more example. There was a case out of, I think, California. The guy, the taxpayer bought the wicker basket. He put a bottle of wine in it. He put some candy in it. He put saran wrap and put a bow on it. Tax court said, you're a manufacturer. That's a new product.
Wow.
So we look to make all our clients manufacturers.
No, that's really proactive thinking. Why do you think that most CPA firms don't think like this, think like you do, Steve?
Well, I think two things. One is it's entrenched. Young people coming out of college, who do they work for? They work for the old-time CPA firms. See, one of my blessings is I grew up in an entrepreneurial family. I went to work for my family for a while, and then when I left, I went to work for retailers and other financial people, and it wasn't until I went back to school and got my accounting hours I opened up my own firm. I never worked for another firm. I didn't know how you're supposed to think. I didn't know how you're supposed to do it. So I think part of it is being entrenched, hand down from generation 1 to generation 2 to generation 3. So that's part of it. And part of it is every CPA firm that I know of is busy as can be, and we're fairly busy. And the problem that I've adopted a long time ago is I never want to be so busy I don't have time to read or think. And so our hourly rates are higher than normal, but we don't work our people more than 40 hours a week year-round. We close Friday at noon year-round, and I have time to think, and that's what we sell. Is we sell creativity and we sell service, and our job, unfortunately, includes putting the information on the tax return, but that's not our job. That's not where clients are paying us. They're paying us to do the work before it hits the tax return, not just do compliance work.
I understand entirely. And now when you're hiring, how do you find CPAs who think like you do?
I don't. I find CPAs that learn to think like me. I do. First of all, a lot of them are coming from 75 and 80 hours a work week for a quarter of the year, and now working 40 hours a week. Or actually 35 hours a week. So that helps.
Yeah.
And we usually don't have much trouble finding people once the word is out that we're looking.
No, I'm sure you don't have trouble finding people. It's finding the right people. But
right.
I hear what you're saying, that you basically introduce them to the system, and if they're a good fit, they'll go with the system, and they'll be successful with you. And if they don't, then of course you have to move on to somebody else. But I want to get back to something you mentioned earlier, which I think is absolutely fundamental to the whole closely held family business. Every company in that world has the same problem.
Yes.
Exit planning. Many of them have not considered, certainly not discussed with professionals. Are they transitioning to a fellow partner? Are they selling to a third party? Is it going to be succession to a family, etc.? Is this a challenge that you come across and you have to help your business owners focus their mind on?
Yes, it is, and we have that. Like I said, we have that conversation as we are interviewing each other, and make sure it's at least discussed, and then we try to remind them about it every couple of years. And I just want to say that part of the interview process, where they're interviewing me and we're actually interviewing them, we want to make sure that we think we can do a good job for them and that they are a good fit for us. We don't take everybody who walks in off the street, and which is also part of the allure that helps us get around fees. Is, as Groucho Marx wants to say, everybody wants to be a member of a club of the club that won't have them. And so we try to have some sort of exclusivity.
Yeah, I think that's very important, because if you're going to perform as you want your firm to perform, if you have a client who's reluctant to share information with you and behave in a certain way, you're never going to be able to deliver.
Right.
So let me ask a little bit of a broad question in terms of what kind of help and advice are business owners looking for from you today? And maybe how is that different from 5 or 10 years ago?
Well, I think the basics are basically the same. Everybody wants to pay as little tax as possible. I mean, that's not a new phenomenon. That's been around since there's been income tax, and so they want to know that the firm they're using has actually given some thought and calls them with some advice. One of the major complaints that I hear from potential clients is, my CPA only talks to me after I give him my books and he's getting ready and he's filing the tax return and he has a couple questions. I don't hear from anybody during the year. I go, well, I understand that. We try not to do that. We try to let you hear from us, but it's a two-way street. CPAs are being enamored with this value billing proposition, but it's a two-way street. If you're going to bill for value, you know what? You actually have to deliver value. You just can't do things the way you've been doing them and call it value billing and raise your prices. That doesn't work. We're in a competitive society. You've got to find a way to differentiate yourself from other accountants. I've had people ask me, who's my competition? I tell them, I don't have any. And I said, if you want a standard CPA practice, you're in the wrong place, because we're not them, And if all you want us to do is what the previous guy has done with nothing more, you're going to pay us a big premium to get the same answer. Einstein said, if you do the same thing over and over again and expect this and don't expect the same result, that's crazy. That you're being crazy about that. So you have to do things differently to expect different results. And I find that after we get over the tax question to find out whether or not there's things that can be done. The second question is every entrepreneur whose family is closely held feels like they're on an island. They think that they know what they're doing, but they have no concept am I doing good? Am I doing bad? I don't know because I don't have access to private company data. I mean, if I'm a retail clothing store, I know what Sears does or I know what Macy's does, but those aren't my competition. I have no clue as to if I'm in the ballpark or not. Yeah, I'm making a nice living and doing okay, but am I above average or below average? And so finding data sets that's information that you can buy and then use that to give client feedback goes a long way. So now you're showing them, here's what other people in your situation are doing financially. And that's probably the biggest thing is reassuring clients that they're actually doing very well or giving them assistance when they're not doing well.
Yes. Well, I think you've mentioned some of the things that you feel your firm does especially well. Maybe what's the one area you wish you did better?
There are several areas we've explored. We've explored doing various things like valuation services that we haven't gotten into and don't plan to get into right now. While I do some litigation services, we keep it to a minor amount because it's a lot of fun, but you lose control of your calendar if you're doing litigation. It's the controls in the hands of the judge or the court or the mediator. And so I would have liked to develop my firm a little bit differently. I'm in the process of training managers and people. If I could learn to be a little bit more hands-off at the earlier years than now. But as far as I wish I came up with this philosophy we've been doing about the last 15 or 18 years. I wish I had developed it 10 years earlier. I wish I would have smarter than that. We do a client spotlight, which you saw on our website. We do that every quarter, and that's where we talk about clients. And I've actually gotten referrals off the web. Somebody looking for a construction client. They read our client spotlights and saw that we do construction business. So I wish I think we've been doing that for about the last 10 years. I wish I had done that 25 years earlier. It's a case of having time, thinking about it, and working on my business as well as working in my business.
Yeah. Now, I'm sure that's advice you give to your clients as well. But what would you say the biggest challenge your firm is facing right now?
We're going through transitions. I'm approaching retirement in 5 years and developing people and having we've always had a practice continuation agreement with other firms, but now we're actively moving forward in a practice continuation internally instead of using other firms. And I started it several years ago. I probably should have started it earlier. I'm as guilty as the next guy. I joined a businessman group of coaching, and it's gotten me over about the last 10 years, and it's got me to concentrate and work on my business instead of in my business a lot better. And we recommend that to clients as well, to think about using coaching and having other sets of eyes and ears, because we all have the same problems. I'm a CPA firm. You could be a law firm. You could be a retail clothing firm. You can be a real estate development firm. You all have people problems. We all have continuation problems. We all have, except for our individual expertise, we all have the same problems. And so it never hurts to get together with a group on a regular or continuous basis to sit down and discuss these problems and help people think through it.
Taking a little broader perspective, lots of people are actually nervous about the rapid changes which are taking place in the accounting industry. Now, at Hayden Rock, we like to look at every change as an opportunity. But as you look forward, Steve, where do you see the opportunity?
The opportunity is, like I tell everybody else, I wish I was 20 years younger. There's just not that many people coming up behind, and so I think we're going to have a greater shortage of accountants. And I think the opportunities is if you distinguish yourself and have a niche or do something different, I think the opportunities are much greater. If you learn how to manage your people, treat your people right, and have them grow with you. I think the accounting industry is set for, or the individual accounting firms are set for big growth if they can figure out how to manage it, because the competition is going away. It's being let fewer and fewer, at least in this area of the country. I wouldn't say every week, but monthly or quarterly, there's an announcement of several firms that have changed ownership, that have consolidated, and all you're doing is going back to the large impersonal firms. So for those of us that want to remain a small personalized niche firm, the market is growing and growing because more and more people are leaving it.
Yeah, no, I can completely concur. Hayden Rock, our feeling is that the small's the new big, because the opportunity for the fast-moving progressive CPA firms, 3 to 10 partners, massive opportunity there, and they can change quickly if they have the foresight. You seem to certainly have that in your firm, and it feels like we're in sync in many respects. We're close to getting out of time, Steve. So perhaps I could ask you: is there anything else you'd like to add, to mention that you wanted to talk about?
Well, even though we do exclusively closely held and family-owned businesses, we've been a member of an international organization for, 10, 12 years, and we've added that just to attract European firms that are members of our European affiliates looking to come to do business in the U.S. to consider us as well. And so we joined this type of organization because we felt that not many firms our size have international affiliations, and we've managed to hang on to a couple clients as they wanted to do work in Canada, the UK, and so we continued keeping the client relationship because we were able to find affiliates in those cities that would help our clients out. So I would suggest that firms, even smaller firms, think about other avenues that you can help your clients out on a global basis. We're becoming a global economy. And too often I've talked to my brethren firms, and they go, well, we're not going to throw away $3,000, $4,000, $5,000 a year. I mean, everything is, I understand the cost-benefit analysis, but sometimes when you're looking out the front window, you can't always make decisions on that. You've got to do planning and budgeting and say, where do I want to be and how do I want to be positioned? And we've always taken the attitude that we want to be one of the leaders and not one of the followers.
Well, I think that's a great thought to finish on, Steve. As I said, our time's just about up, so I'd like to thank Steve Bankler for being so generous with his time today. Thanks, Steve.
You bet. My pleasure.
If people want to learn more about you or your firm, what's the best way to reach you, Steve?
They can go to our website. We have a Contact Us web page, that they can fill out and email us, or our phone numbers are on there.
Could you give us the web address, please?
Sure. It's www.bankler, bankler.com. Pretty simple.
Oh, very good. Okay, bankler.com.
Right.
Okay, so that's great. Okay, so there you have it. This is Ian Wellham saying goodbye for now. Thanks for listening. We'll see you next time on the Accounting Success Podcast.